Hello and welcome to watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we hit films and the closing action on the D-Suite. But largely, it's been a pretty range-bound trading session for the markets throughout the course of the day. And right now, if you look at the Nifty, it's hovering around the 24,800 odd mark right now. Even when we look a little deeper and below the surface, you will be able to see there are several pockets that are showing us some strength, but largely muted or a very minuscule kind of a momentum on either side of the gains and the losses that we can see for the market. The Nifty Bank also is hovering a little higher. You can actually see names like Indusind Bank, Bandhan Bank doing very well in trade today. Of course, all eyes will also be on across the board as to how several sectors and stocks are reacting to the news flows. But let's welcome our guest on board, Mr. Kunal Rambhia, is joining in on the program. That is insight on the markets. He's the founder of the Suite. Warm welcome to you, Mr. Rambhia. Help us understand when it comes to the market, what is your fresh view? Are you right now looking at very closely what's happening and developing in the global markets, especially with on the back of the geopolitical tensions? Is it going to be just something that will be a passing phase, or do you think there could be a deeper impact of the markets? Because we had started on a recovery path, but again, because of this new overhang, we are unable to cross beyond 25,000.
Good afternoon, Sakshi. Thanks for having me on the show, and good afternoon to all our viewers also. So if you look at the overall Nifty range, it's been almost in the, the sideways consolidation, the support being at 24,600 and the resistance being at 25,050 kind of levels. It's been almost a month. The Nifty is hovering between this particular range itself. And I don't think that the impact of the geopolitical stress is somewhere seen on the markets. Reason being, we have already witnessed the time correction after the massive rally in April and May. So I think this sideways consolidation is likely to continue. Buy on dip can be a good strategy on indices, be it Nifty or Bank Nifty. Stock-specific moves are doing really good. And I think our investors should focus mainly on the stock-specific moves, as we discussed earlier also. Unless the Nifty crosses 25,050, 25,100 zone, we should look at the stock-specific moves rather than trading index actually.
Kunal, if you could hear me, this help me understand any key stock ideas that you're looking at currently?
Absolutely. So, Sakshi, just now before we started the session, we had the alert coming on Indigo Paints. Now, this counter has started right from the lows of 920 levels. Right now, it's trading at 1080 and it's very clearly making higher top, higher bottom formation. Something where the risk reward ratio is extremely favorable for positional traders as well as short term traders. So, with the stop of 1040, one can go long on it. And the positional targets on this can be 1250 to 1300 levels. The second is DEM Capital. After the recent correction from 300, this counter is taking a pause now near 250 mark, and it's showing some kind of resilience on the downside. So with the stop of 250, one can go long on DEM Capital also, and the targets can be 280 to 285. And the third is HCC. This counter has just surprisingly come on my screen right now. This counter was today in the lower circuit at near 29.92. It's right now trading at 3160, and look at the volumes. They are really good. So with the stop of 29.75, one can go long on this also. I think this counter is heading for 36, and above that we can see the levels of 40 also. But just one thing, that in HCC one needs to maintain the risk because this counter is now heading for that 5% circuit mark criteria.
Okay, got that. Tell me your fresh view in bank. How are you looking at it? There is a 5% rally on this one as well today. Is it back on the radar? Are you looking at it afresh, or are you still being cautious, especially given what happened in the last few months?
So Sakshi, during March 25, this counter made low of around 600 levels. And since then, this counter is just clearly making higher top, higher bottom. It's been last, I guess, a month and a half. This counter is now in sideways consolidation and facing the resistance near 850 mark. In fact, May 2025 high was 855. We saw the similar high on 10th of June. And today, again, it's making the same high of 855. If the counter manages to close about 855 zone and for a day or two, then we can say this entire downtrend which we are witnessing on the weekly chart since last 1.5 years might just come to an end and a fresh rally might just emerge. So with the stop of 810, one can go long on the stock then, and the targets can be 1025 to 1030. But mark my words, this view is validated only if the counter closes above 855 zone for a day or two at least. Then this entire view will get in place. Otherwise, we'll have to be cautious at this level.
Another underperformer has been Bandhan Bank. What's your view there?
Absolutely. Bandhan Bank was, that mid-cap counter, mid-cap banking counter, which has not really performed since pretty long period of time. In fact, since 2020, this counter is clearly, there was just one spike in 2020, and after that, this is just in downside consolidation with negative bias. As of now, it has bounced from the extreme low support levels of 125, 130. But again, someone who wants to trade short term can initiate a buy at this level with the stop of 173 and the target being 190. But as a positional player, I will still avoid this counter for now. If the counter manages to close above this 195 zone or say round off to 200 levels, then we'll shortlist this counter for the positional trade. Otherwise, it's good to go for short term, avoid for positional trade.
Okay. What about the sector? Are you liking that sector with the fresh moves, both large caps and mid caps? And can you also share any few stocks from this basket?
Absolutely. The IT index is showing, the really good comeback. In fact, I hope you asked about mid cap IT itself, right?
Yes.
Your voice is not. Yeah. Perfect. So this sector is actually, the index per se bounced from 32,500 levels to as high as 39,000. That's been a really good move. But the higher of higher bottom has commenced just 7 to 8 days back itself, precisely on 11th of June. And from here on, the entire sector is getting qualified for buy on dip. The preferred bet in this segment are first is Infosys, sideways consolidation, and this counter is today giving the breakout of 1630. Now it's trading at 1632. So any closing above 1630 will trigger a buy signal on this, stop loss being 1575, and the targets being conservative targets being 1800. Second is TCS, which is looking equally good, but the today's move is turning out to be like a sideways consolidation again. We're just waiting for the breakout of 3550. Above 3550, the targets can be 4000. The other mid cap counters are equally doing good, but as of now, I'm just looking at these two large cap counters where my bets are already placed.
Okay, now Kunal, let me understand what are you looking at in the auto space as well? Is that something that's coming up fresh onto your radar? Why I'm asking this? Last few days there has been a fresh concern about the rare earth magnets. We've also seen Maruti Suzuki cutting down its production targets. Tata Motors has again been in focus because of the muted outlook on JLR that they have shared. So that's back in focus. Today, SML, Isuzu, and M&M are in focus because of the further approvals that the company has got. So the entire auto pack is coming back in focus. Even two-wheelers are showing some technical bounce. How are you looking at it?
So Sakshi, on this sector actually, there is individual stock specific move which is working well, not like IT sector where we are going gung ho on the entire sector. Here the stock specific moves are very interesting. Look at Maruti; it's trading at 12,750 to 12,800 mark, but this counter has not really surpassed 13,000 mark decisively since April 24. It's been a year. This counter is consistently facing resistance near this 13,000, 30,100 zone. But at the same time, we have Tata Motors, which is consolidating near the low, and my view is still absolutely intact. This level of 665, 670 is the best level to think of accumulating for long term because risk reward ratio is extremely favorable. When it comes to Hero Motors, again, this counter is on the verge of breakout, and that breakout is at around 4,500 levels. It has not closed above that level since December 24. Any closing above 4450 will trigger the new rally till 5000 levels. So yeah, very stock specific one needs to play. Just make sure that whichever trade is our viewers are taking, they need to trade that sector, that particular stock itself. Don't compare the individual stocks with the entire space because entire space is not moving in the sync with each other actually.
Okay, so apart from autos, banks that are higher, it's consumer durables that are finally picking up some pace. Is that space coming back onto the radar? Now look at it, Kunal. We have monsoons that have already kick-started in various parts of the country. We already have bazooka rate cut from the RBI. We have already had the tax cuts implemented from April. All of these factors can induce more consumption. They are, positive for the demand uptake. How are you looking at consumer durables, consumer staples, all those things where people can spend more money?
Sakshi, I think Delhi guys will have to still wait for the rain to come, but yeah, this is already started in Mumbai. When it comes to consumer durable sector, this sector is still down by around 15% from its highs of Jan 25. And if I look at the extreme low, the low was made at around 25%. So from 25, we are up by around 10% from that absolute level, but still down by 15% from the highs. I am still a bit skeptical about the immediate moves on the sector. Reason being, the sideways consolidation is seen, and not any specific stocks are also showing extraordinary moves. They are consolidating, so it's good for trading community to keep watch on it and identify those zones where we can take up the trade individually. But the entire sector is still not showing extraordinary moves. So I'll just be a cautious on consumer durables. The index per se, the support is at around 36,000 levels, and the resistance is at around 38,000. Keep these two levels in mind. If the index goes above 38,000, then probably this entire consolidation of last 3 to 4 months might just come to an end. We might see a fresh rally emerging from that level. But till then, I'll avoid this sector for now. All other fundamental factors are supporting it, but the price action is not really reflecting the same.
What about the pharma story? How are you looking at that? Donald Trump says pharma tariffs are coming soon. Is that a thing to be worried about?
Sorry, your voice is completely missed out. Can you please come back?
Pharma stocks.
Pharma sector. I think you're talking about the pharma. Nifty pharma index again is sideways consolidating, and as we discussed even the previous week, very selected pharma companies are looking good. Look at Glenmark Pharma for the sake of it. This counter was consolidating near the lows, and 1550 was a level which we were witnessing, and we had discussed on our channel also. This counter is right now trading at 1660, and this counter seems to be entering into the fresh rally. So with the stop of 1550, one can definitely go long on its, and the positional targets can be as high as 1800. Look at Sun Pharma again. This counter was sideways consolidating near the lows. Let me share the levels with you. Sun Pharma was consolidating near the lows. 1660 to around 1655 to 1660 was a support level, and this counter has also now shown some kind of support holding up, but the momentum is missing. So we'll have to wait for the breakout of 1700. Above that, the targets can be 1800. So, and coming to Cipla, which is again the shortlisted counter in our firm, the counter is not giving breakout of 1550 mark. So if it gives a closing above 1550, the new rally can emerge till around 1675 to 1700. So you'll have to play very selectively on pharma again. As of now, long on Glenmark makes sense because of momentum. Sun Pharma and Cipla, we are waiting for the breakout to come in. So if there is any trader who is willing to trade a derivative for the next 10 days remaining to expiry, one can create short straddle and wait for the breakout. I think that can give good 2.5 to 3% opportunity on Cipla and Sun Pharma.
Perfect. Cipla and Sun Pharma is something we keep an eye out on. What about the real estate sector now, Kunal? Real estate. We have been seeing several news points here. Godrej Properties has been in focus. DLF has been in focus again. Macrotech has changed its name to Lodha now finally. How would you look at all of these developments?
Absolutely, the real estate sector is actually showing good comeback again. But as again we are witnessing the same situation in most of the sectors here, the stock specific moves are very, very important. Look at DLF. This counter is not able to cross the highs of 900 levels since March 24. And recently, you can see just a couple of days back, it made a high around 886, and now it's trading around 850. So again, we'll have to be very, very cautious on taking up the new trades at these elevated levels, because this might just create trouble for us in terms of going long at the wrong levels. If the counter manages to come near 800 levels, then I think with the stop of 775, one can think of going long. Oberoi Realty is the one which I'm tracking again very closely. On this on this chart, the momentum has just emerged fresh, and the breakout was at around 1700. Counter is trading right now at 1900 with the stop of 1800. Even at this level, one can think of going long. The targets can be 2150 to 2200. So again, this is not the sector where we can just go gung-ho on the entire sector. Cherry picking will work here also. So for now, Oberoi Realty is the best pick among the entire sector.
Okay, we've talked about several sectors. I want to talk about the capital markets related story. We'll start off with BSE. Kunal, expiry shifting there. Tell me, what does it mean for BSE as a stock? And of course, course, what does it mean for all the investors who may be looking at investing and they see in the unlisted market already the prices are spiking there ahead of the IPO? And tell me then about the capital markets related story, all the stocks there.
So again, when it comes to BSE, this stock has given stellar performance even in the recent times. From the lows of March 25, this counter is up by almost 100%. And the recent correction, which we witnessed because of the change in expiry story, today was a gap down, and the entire recovery has been seen on the chart. So yes, it's a perfect level to initiate by if someone wants to ride the rally. With the stop of today's low, that's 2500, one can go long, and the targets can again be 2850 to 2900. Again, on this kind of counters, I generally don't prefer to keep the targets, rather manage the stop losses. I think the rally might just continue for a long time. The second is CDSL. With the stop of around 1600, one can ride the rally on CDSL too, and the targets can be short-term targets can be 1825. Again, keep trailing the stop loss and hold the position. Third is MCX, which is looking equally good because this counter is now hitting the new highs. It's near to the previous high. I will not advise a fresh entry, but if the counter gets into sideways consolidation, then with the stop of 7600, one can go long on that counter too. And the targets can again be 8150 to 8200. All these counters are absolutely trending. So in such counters, again, rather than keeping the targets, one should manage the risk and hold the position so that we can make actually good wealth out of such counters. The way we discussed defense, I think these counters are also getting shortlisted under the same formation domain.
Okay, got that. Now, Kunal, what about the brokerage-related stocks? IFL Finance, Angel One, 361 WAM, Motilal Oswal, Geojit. How are you looking at these stocks? And does anything change for them with the expiry shifting?
Honestly speaking, nothing much has changed. Even on the price action front, Angel One is sideways consolidating since 2023. The resistance is placed at 3350 and the support is at around 2000 levels. And you can see just from that level itself, recently again this counter has fallen by making the high of 3250. Same is the case with Motilal Oswal. The counter is not doing much on the price action front, reaching near the previous highs. Again, extremely cautious on these counters. They are trending, certainly they are trending, but they are near the resistance marks and those previous highs where people saw the extreme highs and then the correction of as neat as 50%. So we'll have to be cautious at this elevated level, but otherwise this sector is looking good and buy on dip can be good strategy, but let's not initiate buy at these levels. We'll wait for some kind of correction to come.
Okay. So now the next one I want to put forward to you is the Anil Ambani Group stocks. We have seen what has happened with Reliance Power. What we are seeing now is Reliance Infra is coming back in focus. Today there was a 5% circuit on this one as well. This is after the company signed a major aviation partnership. Its subsidiary Reliance Aerostructure Limited joined hands with the French aerospace giant Dassault Aviation, and therefore we saw a sharp uptick of 5% rally on this one. Is the group going through a re-rating? Should one look at this afresh?
Let me confess on air itself that we missed out the entire rally of Anil Ambani Group. Reason being, we never traded this counter. And when we look at the fundamentals and at the same time we try to find out entries using technicals, this counter has never got shortlisted. But yeah, absolutely missed out opportunity for us too. But fear of missing out is something which we need to always be worried about. But yeah, the counters are looking very, very good. Look at Reliance Power. This counter is clearly making higher top, higher bottom. Today also it's in the upper circuit of 5%, and the trend is absolutely intact. So if someone is holding, then with the stop of 60, one can continue holding this counter. And the targets, let's not keep the targets because crazy highs were seen even in the past, right? So we just trail the stop loss in such cases. Reliance Infra, which you mentioned, again is looking very attractive on the charts. Let me just share the levels here. With the stop of around 355 to 360, one can hold this position to. In fact, the higher top, higher bottom formation is seen right from July 2021, where the counter was near 100 levels. Now it's trading at 386, and still the trend continues. So yeah, if someone is holding, then certainly continue holding it. I don't know whether in this upper circuit and lower circuit counters will be able to manage the risk. But with that stop, one can definitely hold. One can create new positions also. Trend is strong. The volumes are really good. And yeah, they are making good. So the entire sector on the price action front is looking like a turnaround story, and one can definitely participate. But as I admitted the fact, we have missed the entire rally.
Okay, 3:20 p.m. Kunal, any BTST, STPD ideas?
So Sakshi, we just discussed about the first counter, which was Indigo Paints, and we discussed when the counter was around 2% up. Just have a look at this counter right now. It's trading 4.5% up, and significant volume is seen on the chart. So I think with the stop of 1075, 1080, one can definitely initiate fresh entry onto Indigo Paints. Immediate targets can be 1150 to 1200 levels. The second counter, which I already discussed, and again I'll reiterate the same, is DAM Capital. With the stop of today's low, which is 245, one can go long. The targets can be 270, 270 to 275. That's very short term target. And the third counter, which is showing extraordinary volumes right now, is Ramki Infra. Now look at this counter, which was trading near 510. Suddenly, after our show started, this counter is now trading at 521 and near to day's high, 2% up. I think with the stop of 510, one can go long on that too. The targets can be 545. So these three are the counters to watch out for short term, out of which two are looking good even for long term. Ramki Infra can be short term for now.
Okay, got that. Those are the stocks that you can look at. One more sector that I want to discuss is hotel space. Now, we have actually seen most of the hotel stocks have actually had a lackluster first half of the calendar year. Many have dropped even 14% from the peak, etc. Look at an EIH, look at Lemon Tree, it's down 10% from this year itself. Chalet Hotels is down 9%. Mahindra and Mahindra Resorts and Holidays, that's down. Several others are also, lacking the steam that used to be there in the previous rally. Is it time to check out of the hotel stocks, or is it just giving you an opportunity to accumulate?
So I think still this entire space is looking in sideways consolidation. I'm not tracking this sector very closely, but still, the couple of counters which I keep answering on air regularly, the first being Indian Hotel, still sideways consolidating. The support is near 700, resistance being 825. Counter is still trading near 760, and it's been almost 6 to 7 months of sideways consolidation. Not much on the charts as of now. Similarly, at on the Lemon Tree Hotel chart, again, the similar kind of formation is seen. Sideways consolidation, support being 125, resistance being 145, it's still at 136. So not much to actually cheer about. If someone is holding with the long-term view, can certainly hold these counters with the stop being 6 months low, which wherever the 6 months low is, that's approximately 120 for Lemon Tree. Similar was the case with Indian Hotel. I think those can be good lows to hold on for now. And someone who wants to take the fresh entry should think of buying near those extreme lows so as to have favorable risk reward. But momentum is certainly not seen on the entire sector space as such. So avoid for now, I think.
Okay, got that. So that's the advice on this one. As we approach, the next week as well, this will be the expiry week too. How are you devising your strategies on the markets? Are you sticking to the index, or are you looking at absolute stock-specific strategies for this expiry?
So, no, interesting fact about this expiry is, Sakshi, that we have seen sideways momentum in most of the counters, and they are actually trading near the lows. As we discussed about Tata Motors, there are many such counters which are still near the lows. For remaining 10 days, the approach is going to be simply finding out those support areas, creating short straddles and going long on future. I think this 2.5-3% opportunity on stock specific moves are really good. Index per se, Nifty by any chance we see coming near 24,500 can be good level to initiate by, or if the breakout is seen about 25,000, 25,050 mark, one can go long on index also. But I think for next 10 days, our focus will be primarily on the stocks which have fallen a lot and which are now into sideways consolidation, so as to take the opportunity of option writing.
Okay, fair point. Any space which you are avoiding at this point, Kunal? What are you avoiding?
Being very honest, I'm avoiding only one space right now, and that's defense space. I think too much of optimism is seen, and the extreme stretched valuations are also seen. Counters have been in sideways consolidation, so I'm being very, very cautious on the entire space. Hindustan Aeronautics is the counter where I'm finding out the shorting opportunities rather than going long. So yeah, these are the counters which have gone up too much. I think that's the count. This is the space which should see some kind of price correction now. So I'm avoiding this space for now for longs, but I'm definitely keeping an eye out for the shorting opportunities.
Okay, got that. That's the shorting opportunities. How about the mid and small caps? Mid and small cap stocks.
So mid cap and small caps again, Sakshi, the sector is the entire index is not showing any major momentum actually, but stock specific moves are doing good. Selected small caps like RCF or say this counters like SW Solar, they are consolidating really good and they are showing good the base formation. Index per se is already shoot up significantly in the month of April and May. I think more or less sideways consolidation with some kind of profit booking bias may continue. But these counters, which are at still lower levels, are offering good opportunities. So from the entire space, I think I'll focus more on those selected mid caps and small caps. But for next 10 days, I will not be creating new positions on it. Rather, my focus will be on generating some good income out of option writing. But for the next month, yes, the stock specific moves might just continue. And again, we'll share the same with our viewers.
Okay, got that. I also wanted to ask you about the metal stack. Vedanta has now confirmed having sold off stake in Indusind Bank, about 3,000 odd crore rupees into it, and that's why we saw the initial reaction today. How are your views on Vedanta, Indusind Bank, and the rest of the metal pack?
Absolutely, very, very strong. In fact, Hindustan Zinc was the sector the counter which was looking very good to me till yesterday, to be very, very honest, because the trend was very strong. Today, after this gap down of 7% because of the dividend effect, obviously, I'm still waiting for the counter to reclaim 465 mark. I think these are the good levels to think of initiating buy on them. Hindustan Zinc and Hindustan Copper are two preferred bets for me right now. Both of them are looking good to me, with the upside at least being 5 to 8% and downside being very, very limited.
Okay, got that. Kunal, we'll thank you then for being with us on the show and helping all our viewers out with all your insights
My
across
pleasure.
sectors and stocks.
Absolutely my pleasure, ma'am. Thank you so much.
Thank you so much. Viewers, 24,805 on the Nifty. You can actually see a very choppy, volatile, range-bound trade, 0.19% lower on the Nifty right now, 48 points of a decline on the Nifty. Let's look at how things have panned out below the surface area as well. All across the board, there is some weakness. Nifty 100 stocks, Nifty 200 stocks, Nifty 500 stocks, 0.2% have been lost on these indices. Mid caps down by 0.5%, small caps 0.1% lower. All the sectors barring auto and private banks are seeing declines, and even consumer durables. Three sectors in the high zone, but rest of them have all slipped in trade. Now on the Nifty, the top movers on the Nifty on the higher side in the gaining zone, you will see Indusind Bank as among those top movers. You will see names like Trent, M&M, Maruti, Eicher Motors, and Asian Paints. But on the downside, stocks that are actually hovering lower in trade today. You can actually see names like TCS, Adani Ports, JSW Steel, Adani Enterprises, all losing in trades today. That's as far as how the markets are shaping up. You can actually see some weakness across the board. Even the FMCG stocks are actually lower in trade. How will you really see the markets plan out tomorrow and day after will be important to see. Weekly expiry tomorrow, will we see heightened volatility? How will the global cues shape up tonight is also going to be very important to track. We'll leave you at that. Stay tuned on to Business Today Television as we continue our coverage beyond the markets. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show that's